Okay, we're back. This is actually being recorded on Halloween, and I was playing around with some funny Zoom filters, and I ran across this one. I thought, what the heck? Let them see a cartoonified version of me. Anyway, I'm here to talk about Janet Yellen, our very interesting U.S. Treasury Secretary, who is claiming we need to do some unrealized capital gains. You may have heard about this in the news, but if you're not familiar, there's a 1-minute clip, which I'll play now.
Well, I think what's under consideration is a proposal that Senator Wyden and the Senate Finance Committee have been looking at that would impose a tax on unrealized capital gains on liquid assets held by extremely wealthy individuals, billionaires. I wouldn't call that a wealth tax, but it would help get at capital gains, which are an extraordinarily large part of the incomes of the wealthiest individuals. And right now, escape taxation until they're realized, and often they're unrealized, and at death benefit from so-called step-up of basis. So it's not a wealth tax, but a tax on unrealized capital gains of exceptionally wealthy individuals.
Very interesting video. For someone who gets paid $7 million to speak for 10 minutes at Citibank, you think she would be a better speaker. Anyway, we're going to dig into this a little bit, talk about the consequences if this should pass, how you hedge against it, what you can do now. One of the things I'm going to talk about a little later is iTrustCapital. Hang out for that because they have a very great promo right now for our subscribers. You can get $100 in Bitcoin when you start up an account with them. Check it out. Learn all about it. It's a very, very interesting, cutting edge, and fantastic service. I'm very happy with them. So let's get it. So she muddled through that. What is an unrealized capital gain on a liquid asset? So a liquid asset would be an equity, a stock. And as we all know, stocks go up and down through the market. And you don't have an actual gain you can record until you sell it, or a loss. Throughout the year, it's going to go up and down just like anything else, just like property value, just like any other type of investment. So what she is hoping to do is capture these gains when something's at the very peak up here and say, okay, you had this much value, we're going to tax it, regardless whether it goes back down and you're at a loss later in the year. Why do they need to do this? Why are they even talking about this? This is a funky, weird scheme. Well, the Federal Reserve is boxed in. I show you guys the U.S. debt clock over and over again. I'm not going to bring it up. I'm not going to pull it up, but it's usdebtclock.org. The Federal Reserve cannot raise interest rates right now. It's just boxed in. So we're in an inflationary period. And the sensible thing to do would be to raise interest rates, to tighten the money supply. When you have so many dollars in the market floating around, the purchasing power of each individual dollar becomes less. The more dollars you pump out there, the less buying power each dollar is going to have. Check out some of my other videos on inflation where I explain this in depth. So the Fed has to tighten the money supply to get a control on inflation. And like I said, if it does that, it's going to have to raise interest rates, and that will contract the money supply a little bit. But if they raise interest rates, the U.S. cannot collect enough money to pay the monthly interest on the debt. So it's really stuck. So they're just trying to think of crazy ways to collect money in a hurry. Will this idea pass? It's unlikely. It's very unlikely. But remember, the bad ideas of today become these lost gems in the future. Remember, Thomas Sowell often says every bad problem of today, I'm paraphrasing, every terrible problem we have today was once a government solution of yesterday. So I could see in the next generation or two, as time wears on, when presidents are no longer in office, we think about them more fondly than we did when they were in office, and think, oh, this great this great Treasury Secretary, Janet Yellen, way back when, had this great idea. We should be using it. And they eventually do become policy. So this will happen eventually. It may not happen in this election cycle, in this current administration, but it will resurface again, and it's best to be prepared. Remember, income taxes were supposed to be just a temporary government program to take care of a short-term problem. Now, we know how that worked out. We're still paying income taxes to this day. Before 1911, the U.S. had no income tax. It was considered unthinkable and unconstitutional. So the 16th Amendment had to take care of that one. The other kind of really funky and terrible thing about this, even with our current capital gains tax system, it distorts markets. It changes behavior. You, for example, if you make a huge profit in a short amount of time, you may not want to sell that position because you're going to incur all these taxes. So you'll hold on to something longer, even after the point of which you find it to be of value. So it's distorting the price of equities and markets when you have these capital gains taxes. And then when you're going to layer in like, oh, we're going to tax you whenever it hits a peak, you might not even get into certain positions, or you may not want to invest in stocks that are quite volatile. That's very destructive for trying to grow your economy, for businesses trying to get investors. It really distorts the market in a harmful way, and it's the little guys, the smaller investors, that are going to get most hurt by this, because their only options are going to be these really safe plays like blue chip stocks or dividend stocks. I know there's another guy on YouTube that loves to talk about dividend stocks. Well, unless you're 80, you don't want to be in a dividend stock. Unless you're making more than the inflation rate in your equities, you're losing money. A lot of people, and I happen to believe in how they think about it, and I've talked about this in other videos, other people, very wise, shrewd investors, know that the inflation rate we're experiencing right now is probably a lot closer to 12 or 15%. And that's not something you want to suffer with. And you have to invest in something that's going to outperform that. As I mentioned in my real estate video, real estate in a great market will usually outpace inflation. It's a very safe bet. As you can see, people are realizing that, and that's why real estate prices are going very high right now. So if you see a home that hasn't had any improvements, any renovations, and all of a sudden it's worth 15, 20% more, and there's no changes in the market, for example, there's no great job opportunities or no great changes in the demographics or anything like that that would make someone want to move into that area, and the property's still going up, that's inflation. If you see an equity, a stock in a company where their earnings ratio, where they're not putting out any new particular great product, where they have no new great innovative technology that they're pursuing, they're just the same old company they were last year, yet their value increased by 15, 20%, that's inflation. So what's next? Let's say they pass this crazy unrealized capital gains tax. What if they start doing it to property? I was just talking about real estate, how your property goes up. I was just talking about how your property goes up. You bought a house, it's your primary residence, and it goes up in value. Each year it goes up in value. Not only are you going to pay your regular property tax to your local community, but you want to pay a capital gains tax on top of that? Wait for that to come. That's how these things progress. It's a very slippery slope. I would assume the first time they try and get away with that, they'll say, oh, no, we're only going to do it to the rich, the people with multiple properties. Your primary residence will be exempt. It's just a stepping stone. They're going to dig in. And again, people with rental properties, which I explained in another video, are not the most wealthy people in the world. They're generally small businesses. They're not making a lot of money on the investment. It's not exactly an easy, pleasant life being a landlord. They're working hard for that money. And they're trying to save for their future. So it would be devastating to property owners if this type of thinking was applied to capital gains in real estate. Okay, so how can you avoid capital gains? the only way is a Roth IRA. I have another video. I talk about savings and investing. I get a little bit into Roth IRAs and the differences, but let's go over it again, because every day I hear someone who gets it all mixed up and all confused. So let's try and straighten it out pretty easily. A traditional IRA, you're putting in your money before taxes. So it's money you earned, you haven't been taxed on it, you're putting in an IRA, and that lowers your income a little bit by however much you contributed to that IRA. So you get a little bit of a tax break. But when you pull the money out, all that growth you've made over the years is now taxable, and it'll be taxable for capital gains. So a different form of an IRA, which is called a Roth IRA, a good way to look at it is they tax the seed and not the fruit. So they're taxing you at your income level. So it's money you've already paid income tax on. You're setting it aside in this Roth IRA, and then it's never taxed again, no matter how much it gains, how high it grows. When you take it out on retirement, you're not paying a penny in taxes. It's a great, great system. So you can do a Roth within a 401k, like a savings retirement account you do through your employer, or a 403b. It's the same thing, but for a nonprofit. If you're working for a nonprofit organization, you can save into a 403b. And you can designate your contributions. The money you take out of your paycheck is Roth contributions, is after-tax contributions. And here's the little part that most people get mixed up. When they designate all their contributions as Roth, and the company has a matching contribution, say, for example, you put in 6% and the company matches 6%, that 6% match is not Roth. It's considered traditional. So when you pull that money out, that's going to be taxed. So there's separate pots. Keep that in mind when you plan. So what about both? Can you do both? For example, can I have a 401k and a 403b and then also put it in a Roth IRA on my own with a different company? Yes, you can. So you have limits, contribution limits with an employer system, and you have individual limits when you go out and you work with a company and set up a Roth IRA account. If you're under 50, it's $6,000 a year right now. If you're over 50, you can do $7,000 a year. And you can have more than one IRA in different companies. So for example, you can have a Roth IRA that's all equities, for like with Webull, for example. I use Webull as a trading account and I have a Roth IRA in there. I also have a crypto Roth IRA where I mostly have Bitcoin in it. And as the value of Bitcoin grows over the years, none of that money in that Roth is going to be taxed. And for that, I use iTrustCapital. Now, I have a lot of referral links. I talk about a lot of different companies. Every single one is something I use myself and I've had a good experience with. There's a lot of other companies out there that I have referral links for that I don't post because I'm not happy with their service. But I can say iTrustCapital has been the best retirement services company I've dealt with thus far. They have incredible customer service. So you can put cryptocurrencies directly into a Roth IRA and let that money grow. I have a referral code, Basic Economics. I'll also have a link in the description. You can put in Bitcoin, Ethereum, Solana, all the top cryptocurrencies. You can also put in physical gold and silver. I know we have a lot of people on this channel that love Austrian economics, and they're very devoted to precious metals. I can't talk them out of it. So go ahead, set one up, and put all the gold you want in there and not get taxed on it when you pull it out. And it's actual physical gold. They vault it in Canada. So you can read all about it on their website. It is a great company. I love their human touch, white glove treatment. You can set up a online appointment in their scheduling system and schedule a call with someone the same day and get answers to all your questions. They are fantastic about this. So I had an account. It was with TD, and it was a Roth IRA. I did a rollover. Boom. In 2 days, I know they all don't go this fast, but in 2 days, I was able to transfer my funds into this without any tax consequences as a rollover, not a distribution, and they can walk you through all that. They're a great company. I want to thank all you guys. We're up to 53,000 subscribers. That's excellent. We're just trugging along here. And just really, every time you guys share a video, every time you leave a comment, it really helps out the channel. And some of the other ways you can help out the channel, I have this Buy Me a Coffee link you could set up. Totally optional, but I just cannot thank you guys so much for your support in doing this. It really keeps me going. If you're using the Brave browser, you can click on this little link right up here, this little triangle, and send a little tip my way. I also have some merchandise that you guys can check out. A lot of different stuff related to economics, Milton Friedman, Thomas Sowell, Enjoy Capitalism logo, some basic economics branded stuff. If you guys have any other ideas of stuff you'd like me to design or whip up, let me know. If you have any suggestions, I'm happy to give it a shot. I particularly like the coffee mugs. They come out really well. They're a lot of fun. And then the other one that people just love to death is this Amazon Prime Amex card. If you're a Prime member, you get $125 just for signing up for the account. There's no annual fee, and you get 5% back on your Amazon Prime purchases or Whole Foods. It's just a great deal. You could just sign up, never use the card, and get $125 Amazon credit. It's kind of hard to beat. Okay, here's the whole batch of links. They're all in the description. Check them out. Happy to answer questions about any of them. Leave me a comment. I also added this Amazon link, and this is a pretty cool one. If you guys would be so kind, if you just bookmark this link and you used it when you go to buy something on Amazon, it's an affiliate link. It sends a few pennies my way to my channel to help keep me going. None of the prices are changed or altered in any way. You get everything at the same great price you normally buy on Amazon. It just gives a little commission my way to help support my channel and keep me making videos. Okay, guys, thank you so much. I hope you enjoyed this cartoonified version of me. Leave me a comment. Let me know if you liked it or if you thought it was just weird. I can't make up my mind yet, so we'll see what you guys think. Take care. Have an amazing November. The year is almost done. Let's make the rest of it the best part of it yet. Take care, everybody. Bye-bye.
Ja.